What is going on, everyone? My name is Kenneth Beard here with Stock Indices, where I go over my thoughts on the overall market. I go over economic indicators, and I break that all down to give my overall assumption for you all to have a good, informative take breakdown as to what is going on in the stock market. So let's hop straight into this video. Um, I'm gonna start off here with our economic indicators, which we do every single time we do one of these videos. We like to go over the economic indicators so we can get a good feel for what the data is backing up our overall claims and um, what the data is showing us in our markets. So that is why we go over the economic indicators. And so I'm gonna start here. Today is not Monday, October 4th. We're gonna go down here. So on the 11th. Um, Today is Sunday, and so I like to do these videos on Sunday. It's kind of like a Sunday, mm, you know, watch list where I go over, what I'm looking at and what I'm expecting to happen for the week upcoming. And it's just always good to be prepared. So we're going to be looking at these economic indicators for this week and just getting a feel for them. On the 11th, which is Monday, we have nothing because it is Columbus Day, so nothing is scheduled for that day. On Tuesday, though, we have NFIB Small Business Index and job openings. On Wednesday, we have Consumer Price Index. On we have Consumer Price Index, core CPI, and the FOMC is speaking. So you want to always pay attention to that FOMC meeting because that meeting from the feds can show us a lot about the current status of the economy and has a very big impact in the stock market and its overall volatility, because as well as consumer price index. That's a big one that we'll be seeing this month. Consumer price index is going to be showing us the rate of the rate of which consumers are purchasing goods. So, if consumer price index is beating past that previous 0.3%, that would be good for the overall economy, showing that people are spending money a little bit more instead of, keeping it as reserved. Then we got those core CPI numbers, which are very similar to the consumer price index. So those numbers kind of go hand in hand with each other, do the same thing. Um, so we're going to be paying attention to that for Wednesday. That should be good to see. Thursday, we have a very special day with initial jobless claims coming out. And the continuous jobless claims previously says NA. So I'm not sure what that's about. I have to look into that, but I'm not sure if they're just not taking that data anymore or what that's about. But I have to figure that out. But for Thursday, that's what it says. That's what's going to be reported on Thursday. Then we have the producer price index, which is going to be giving us our producer inventory and how much are producers purchasing to make goods and services for consumers. So that's a great number, a great data point, a great metric to pay attention to as well. So we'll be paying attention to that on Thursday. Friday, we have a lot going on. We got retail sales ex autos, and import price index, Empire State Index, consumer sentiment index. Excuse me, I'm getting tongue twisted here with all these indexes, and business inventories. So, with that being said, all of those are great economic indicators which could gauge our market in certain directions depending on, if they're beating their previous stats or not. So retail sales, that's showing us how much people are going shopping. Retail sales, in the name, retail sales ex autos is like retail sales, but for automobile vehicles. So pay attention to that. How much how many cars are being sold, or more cars being sold than previously. That's what we want to be paying attention to. Import price index. How much goods are being imported into the country. Are there more than previous? Um, previously at 0.3%. Is that number going to go up from here? I mean, negative 0.3%. So is that number going to go up from here? Empire State Index. That's dealing with, the Empire State is one of the biggest business buildings in the country, if not the biggest business building in the country. So paying attention to that and those numbers, it can show us, how well businesses are doing in New York, which is a big deal. So pay attention to that number. Consumer sentiment index is a good one, and business inventory is also a good one that we will all be wanting to pay attention to give us that, gauge, like I said, in the market to see whether or not the market is going to stay where it's at, go down from here, or go up based on this good data that we may or may not get. So we're going to hop straight in here to these charts, and I'm going to go over last week's previous craziness that went on here. So the first thing I'm going to look at here is VIX and our volatility index. VIX last week got to some very high points. We got up almost to 30. We were at about 29. So we got to a pretty high level on the VIX, which was concerning for the most part. We came back down, and we got back to a pretty stable level on the VIX, under 19, about 18. And then we popped right back up to 24, back to some very high volatility levels, kind of faked everyone out when, if you were somebody that tried to buy that dip, volatility slowly crept back into the markets. And then we got a consolidation period of some still volatility, not much going on. Volatility didn't push higher. It just stayed going sideways. We can see this right here. And then volatility contracted and pulled right back down. So we're back under that 19 area, not to where the low previously was when we came off that big bounce, that big pop here. We're right above that. So going into next week, volatility can do either of two of these things. Volatility can pop back up and go back higher to those high levels, meaning in more volatility in the overall market, which is not good for a flourishing bullish market. That means that there's a lot of fear. Or volatility could stay under this 19, 20-ish area, continue to consolidate, and maybe even get back to these normal levels down here around 16 and 17, which will be good in showcasing that the market is reducing some of that fear. And that is what we want to be paying attention to, and really paying attention to this volatility and understanding where we're at when it comes to this volatility, and just, because that is that main factor there. This is showing you, what fear, how much fear is currently flowing in the markets. So the first key index that I'm going to be looking at here is the SPX or ES, these E-mini futures. So I'm not looking at SPX, this is the E-mini futures. Here we can see that. Let's go back here, uptrending, having a nice uptrend, and then that volatility came in here, around this area, and we've been seeing the market pull back ever since. And so the market, we've been seeing the market pull back ever since. And so with that being said, we see the market is in a pretty healthy downtrend as of right now. We haven't got below that 180, which is good to say. And so, we can actually draw a downtrend above the market right now. And so where we're at right now is we're just at that 20 and 50-day moving average. And we saw a little bit of red here. Saw a little bit of red here on this moving average, showing indicating to us that the market is reacting to not only the downtrend, but the downtrend that we have. You see the line, and it's not only reacting to that, but it is also reacting to the moving averages. So it is some selling pressure up above there that I could expect to see, that we could expect to see going into this week. And what we really want to look for is to be confirming that the downtrend is not over. Is if on Tuesday the market opens up and closes below the previous high low day. So that is what we are looking. So that the market is reacting to some selling pressure, and like I said, we want to see it close below the previous low day. So if we see that on Tuesday, I keep saying Thursday. If we see that on Tuesday happen, and we see it close um, after this candle, this previous low day, and that can indicate some very strong selling pressure. Now, volume in itself is not backing this selling pressure up just yet. That doesn't mean that volume um, can't come into this market and volatility can't spike once again, depending on the economic indicators that we get released and depending on other economic factors. So you don't want to be so quick just yet to be buying these dips. As you can see previously, we had a dip here that if you got bought out, you got bought out. And you got another dip here that you maybe lost money on, and got another dip here that it's the same thing over and over again. So really want to be careful. What you want to see some consolidation, some stagnatism, and you want to see the markets give up on those sellers and break this trend line. And once we get that, then we can be comfortable with getting into some long positions here for the overall market, the S&P 500 here. So markets could still pull down to this 4250 level, or could even pull down and break out to this 180 day and bounce from here. So we still got room to the downside. Doesn't mean that right now is the necessarily the best time to get in for long positions, and it's definitely not. So you want to keep your eyes open for that. Like I said, putting volatility together and putting volatility in seeing what the market is giving you right now. What the market is giving us is that it's being halted by some sellers in the market somewhere, and they are holding the market down in this trend, in this downtrend. The next one we will look at is the Qs. The Qs is the NASDAQ here, and the NASDAQ is showing us quite a bit of the same thing here. Now the NASDAQ has also a downtrend that we could draw here, and we've seen gap downs, push-ups to the 20, gap downs, push up to the 20, and now we're seeing the markets hold below that 20 and 50, and seeing the markets able to be, if volatility spikes and volume comes back in, we can see that bearishness continue and very close to the 180 day. Would not be surprised if we bounce off that 180 day or get down to those lower levels. Like I said, we have a lot of room to the downside. We did hit some oversold areas right here on the RSI. Now we're out of those oversold areas, and so if we get back to those oversold areas, watch out for bullish divergence, and watch out, for bullish divergence that could potentially happen here if the market tries to push to a lower low, and our RSI isn't showing us that lower low. That could be a good indication. So something I'd be looking out for. But here it already looks like it closed below the previous low day. So you can see here, this is the low day here, and why my thing is sticking. We can see here, this is the previous low day, and the market closed right below that, showing that selling pressure is indeed in that trend. It's confirming that downtrend that we're getting right now. So volatility is still hot in these big economic indexes. Big economic indexes. It's still hot in these indexes. I'm so used to saying the word economic, but like I said, same thing as the S&P 500. Still looking out on that one. The next one we'll be looking at is RUT. Now, RUT still in this very long consolidation period here. But if you're an option strategist and you know how to do these option strategies, you know how to do straddles and strangles and butterflies and iron condors, writing calls and puts. This is a beautiful thing to have because theta decay is almost prominent. You know, theta decay is your best friend for a market that looks like this. And I was actually thinking about doing a butterfly on this myself just because of how stagnant it is and just taking over that time decay on this stock. But I haven't done it yet. And if the market continues to just go sideways here on the RUT, I don't see a problem with it. I don't see a problem with iron condors, and I don't see a problem with butterflies. Because this market has not went anywhere. And so you can see the range we got between 2,300 and 2,100, just about 2,125. Market has not went anywhere. It's just been going sideways. So we can look here though and see that we had a pretty big pullback after having a big up day pullback. But it's just choppiness at this point for the RUT. So really just waiting to see, like, when will this stock ever make higher highs, or shoot, can we even see a lower low at this point? But we can see that the 180 day is starting to catch up with it very quickly, and pretty soon enough we'll be right in contact with it. We've already made one contact point with the 180, which it reacted off of. We can see pretty much every time it's reacting off of this 180, and it's starting to get in this wedge. So I'm guessing pretty much soon we'll see a breakout towards the upside as soon as the market regains, you know, some of its upwards momentum. But other than that, RUT doesn't have much going on with it. But if, like I said, if you're an option strategist, you know how to do those option strategies, you know how to take advantage of that time decay. I think this is a beautiful one to be playing consistently for just that passive income. So that's all I'm gonna be breaking down for you guys today. If you enjoyed this video, leave a like, comment, subscribe, and leave any questions that you have down below, and I'll make a video on it. That's what I'm here to do. I'm here to help you all, educate you all, and just give you all my insight as to what I look at on a daily basis so that we can all in this community learn together. And I'll see you guys in the next one.